966.
We are pleased to welcome back onto the 966 Mr. Eyad Albayouk, General Manager at Flat 6 Labs in Saudi Arabia, an early stage and seed venture capital firm in the kingdom, which just a few months ago closed its first startup seed fund in Saudi Arabia with $20 million in backing from LPs in the region. He had previously worked with Sanabal Investments, Arzan VC, and other organizations before joining Flat 6. Eyad, welcome back to the 966. Thanks for joining us again. Nice to see you.
Thank you for having me back again, and it's an absolute pleasure. Always great to catch up with you guys.
We've been looking forward to this, Eyad, because I know Lucian's spending a lot of time in the space, the VC space, but this is, it's going to be an education for me. So I'm going to school today. So thank you for joining us.
Well, hopefully we'll try to catch you up over the next 30 minutes or so. Unfortunately, it's still a nascent space here, so
and
hopefully we'll catch up.
We catch you at a very interesting time, and just as sort of foreshadowing, we want to start with Flat 6 Labs and this closing, which is exciting. So we want to get you started on that, and tell us about it. Tell us where it is in its process. But that's very interesting to us and our listeners. When we had you back in July, and this is for the second part of our conversation, when we had you back in July, the VC space was coming off of just a roaring first half of 2022. We get you now, not quite a year later, and it's a little bit of a down quarter for not only Go, but in the region, but also KSA. So we'll come back to that. But let's talk about the exciting news, which was just this closing of this fund for you. Eyad, can you talk about that a bit?
Absolutely. And of course, it's been, let's say, a few months or years in the making. But we're glad to get to that milestone. It came a little bit later than we had hoped. I guess towards that tail end of 2022, things became a little turbulent in the global environment. And of course, no matter how far away we are, we're not completely immune to some of the global trends that are happening. Of course, with interest rates having some value now again, it definitely had people recalibrate their asset allocations and what type of investments they would like to put to work. Obviously, VC was an extremely hot space in the period leading up to COVID. Maybe went through a bit of a pause, and then with QE kind of going on full speed and full throttle, obviously it saw a little bit of a tailwind there. Of course, with people being online during the pandemic, that was a big contributor to that upward trend. But suffice to say, things got a little overheated, as they typically do in these cycles. And the chickens came home to roost towards the end of the year with the reversal of QE in quite a rapid fashion. And of course, it made high risk investments, of which, of course, venture capital falls into that bucket, a bit more susceptible, let's say, to a pullback in some sense. Of course, in Saudi, headline figures remained relatively strong, at least within historical terms, but nonetheless, we're definitely feeling the slowdown in more than one area in the market.
Let's talk about Flat 6 in particular and that close. Where can you tell it? And we talked about it sort of in advance back in July, just for our listeners. Can you talk about it? Give us some details on it.
Of course, and of course, there we were pretty much wrapping up the initial closing for the fund. I'm glad we were still able to get there, albeit a little later than we had expected. Of course, the LP mix was a bit different than we had initially anticipated. Nonetheless, we couldn't be happier that we got to that milestone, I guess, within good time from our initial target. As these things typically go, the first close or the initial close is just the start of the journey. So we're still obviously onboarding some additional LPs. I think the common, let's say, theme or trend is that we did see the pullback usually come in from tourist investors. So folks who have not traditionally been consistent allocators to the asset class. Of course, once the dust settled after that initial impact of QE, we started seeing some of the more usual suspects in terms of institutional investors that have a steady allocation to the asset class, essentially revisiting some of the fund commitments and some of the direct investments that they were perhaps considering, including, of course, those that were looking at an allocation to our fund. We still have until the end of the year to essentially wrap up the fundraising process for this vehicle. And again, it's quite unique in the sense that it's 100% focused on the Saudi market. So we exclusively invest in early stage companies that are based in Saudi Arabia. Of course, when we mention early stage within our context, that's typically pre-seed and seed investments that are here on the ground. Since then we've finished our first cohort, so we're currently in that final week of that first investment cohort. So we were quite fortunate to onboard 10 exciting startups that operate across a diverse range of industries, of course, all within the tech umbrella, the broader tech umbrella. We were quite fortunate to find a good group of technical founders, some with pre-existing experience in the space, some more, let's say, novice. But again, that's really what our program is there. It's just to cater to a diverse group of founders that are looking to basically launch their high growth operations.
And again, just to reiterate, all Saudi.
So yeah, everyone in our current cohort essentially was on the ground in KSA at the time of their application. So that's something that we didn't necessarily draw a hard line in. So our mandate is quite broad in that the company essentially intends to operate targeting the KSA market. So most of their operating revenues, operating expenses are essentially generated and spent here on the ground. That being said, of course, we were fortunate enough to get more than 400 applications for that first cohort, despite very limited outreach and us basically moving a little bit faster than usual in terms of launching the first cohort immediately after the fund's initial closing. But what ended up happening is that those that were on the ground essentially were able to articulate a much better thesis for their startups, at least within the context of the Saudi market. So the nationalities are quite broad. So not everybody is a Saudi national, although the majority are. But the common denominator there is that most of them are based in Saudi and have been for quite some time, at least with an MVP. Again, not something that's typically part of our hard line in terms of our acceptance criteria or investment criteria. But again, as far as this cohort turned out to be, that was the common denominator. So all companies that at least have some kind of a product that's ready to be launched. And of course, they're all based here in KSA. Also, quite a diverse coverage in terms of geography within the kingdom. So currently, roughly 50% of the current cohort is based in Riyadh. The rest are based in other cities across the kingdom of Saudi Arabia.
So I don't know if it's a tease or not, but I think it's just because you're being generous. I'm on your mailing list. I'm sure Lucian is too. So I get these invitations to these cool events in Riyadh, which I can't attend.
Hopefully soon.
Yeah,
I think Lucian and I we're working on changing that hopefully soon.
Yep. So actually, sorry, go ahead, Richard.
Well, no, but upcoming March 29th, you've got your first demo day in Riyadh.
Correct. So next Monday would basically be the conclusion of that first batch. And of course, we will have the demo day for the 10 startups to essentially showcase all the exciting stuff that they've been working on to the broader investor community and stakeholders that have an interest in anything related to venture capital within the Kingdom of Saudi Arabia. So we're quite excited to have that.
So you had 400 applicants for this first cohort, and you have 10 that you're now demoing at the end of the month. That's amazing. Is the deal flow still strong I mean, that's very strong. I mean, are you seeing, because we just talked about the international financing environment, are there emerging Saudi startups that need money now?
Absolutely. And I would say more so than any other point in time. So much so that I think we even started revisiting the need for additional, let's say, scouting resources on the ground. I guess it's fair to say that it is an investor's market or a buyer's market in all sense of that word or phrase. It's of course unfortunate for entrepreneurs because it does feel like some of the larger tickets or later stage funding sources have dried up. So of course we get to benefit from that, and that we start to see more diversity in those that are applying, for instance, for the second cohort coming up. And it's looking like we're quite in good shape to exceed our original number of applications that we received for that first cohort. So fingers crossed that remains to be the case over our fund's investment period.
Amazing.
Let's talk about the bigger environment. And we talk about on the 966 that Saudi Arabia is having a moment. You know, it's obviously having a moment economically. It's on the upswing while a lot of the globe is kind of static, if not negative. Obviously, it's had a nice run of oil revenue. It's doing a good job of diversifying some of its, getting more non-oil income. But for me, and Lucia and I have done this a long time, and we'll do it, a significant time further. Hopefully, fingers crossed. The really interesting part is when the moment has passed and there's more difficult headwinds, economic and that sort of thing. It sort of feels like that in the VC sector this first quarter. And we know the larger reasons, the Russia-Ukraine war, the supply chain limitations, inflation, interest rates, a lot of things that put a damper on the sector. You also referenced that some of the folks who are not investing now are some of the newbies, for lack of a better term. Is this a bit of a shakeout for the sector?
I think it's definitely a little bit of a correction, and there's no denying that perhaps the valuations and some of the deal terms that we were seeing over the 24-month period prior to the end of 2022 were a bit frothy, to say the least. So we're definitely seeing ticket sizes go down. We're seeing terms come down to more realistic and more sustainable levels. That being said, though, I think at least I have the view that we did see a bit of an overcorrection, at least within the Saudi context of things. Of course, the headline figure looks great with roughly $500 million of transaction value. But again, if you peel the onion back a little bit, you'll notice that all of those were later stage transactions. So two were Series C, and then one was basically a venture debt deal structure that went to also a later stage company. Within seed, pre-seed, Series A, Series B, basically Series B, we saw no transactions during quarter one. Series A, Series Seed, and pre-seed saw all significant drops in terms of both the volume and to some degree, of course, the quantum or the amount of investment going in. Roughly, it feels like an 80% drop year over year. Of course, I wouldn't attribute the pullback in the market as the sole reason there. Another good reason is that we haven't had Ramadan come in close to Q1 this in such a long time. I think the last period we had Ramadan come in close to or within quarter one was back in 1995 to 1998. So it's going to be an interesting next few years as far as Q1 figures are concerned with Ramadan essentially cutting through that quarter.
So
So
it's
a lot of factors at play, that's for sure.
it's a thing. Ramadan is a real damper.
Absolutely. And I think the impact really was felt more in April, more so than any other month, because most of Ramadan essentially was during April. Nonetheless, of course, there is a little bit of a precursor there leading up to Ramadan where things kind of start shutting down, or at least slowing down as people get ready for the holy month.
Yeah,
Um,
it was a little bit of firestorm. I mean, every year for us, there's got Easter too on the other side, and then you had
yeah.
Silicon Valley Bank thrown in there.
Yeah.
So
And
definitely the
FTX.
banking,
Yeah.
absolutely, the banking crisis did not help at all. Of course, surprisingly, some of the companies on this side of the globe were impacted. So it just goes to show the wide reach of Silicon Valley Bank and the American venture capital institution, really. So that was a little bit of a surprise to see. Of course, it definitely made people second guess not only venture capital as an asset class, but also some of the more, let's say, exotic cryptocurrencies and just some of the more nascent asset classes that kind of emerged on the back of the blockchain and cryptocurrency in general. That being said, I really don't think it's a representation of what's to come. At the end of the day, we do have quite a significant amount of dry powder within the system and within at least the allocations that are supposed to be targeting the kingdom. So I think it's just a matter of time before we see some activity kind of resume there and numbers to pick up once again. Of course, there's always a flight to safety, which I guess would explain why we saw Series C terms or later stage terms that are closer to an exit event or an IPO see the light of day, and less, of course, emphasis on the riskier and earlier stages within the asset class.
Yeah, closer to traditional private equity in that sense.
Absolutely.
Do you see an increase in M&A this year, maybe as a sort of I guess time filler until Q1 2024 when things should heat up again?
I think we're going to start hearing a little bit about some acquisitions within the space, mergers, and basically maybe some of the less sustainable startups joining the ranks of some of their more maybe resilient peers that are operating in the space. We definitely see a lot of talks and a lot of negotiations between those startups that are maybe in a better cash flow profile compared to their peers, talking about possibly taking over, even if it's just an acqui-hire, or basically taking over their products and operations and continuing to support their vendor liabilities and so on. So I think it's just a matter of time before we start seeing some of that get to the headlines and see some transactions basically closed.
So do you guys have a lot of, or now that you've closed your fund, are you working now with some international VCs or other VCs on the ground locally to sort of, I mean,
it's definitely always in our pipeline in terms of getting the appetite from maybe some of our regional or more international peers to consider investing in some of our startups. Of course, a big mandate or a big thesis that we have in this fund is our own emphasis on following on our portfolio companies that performed better than the rest of their peers when it comes to their actual financial performance. So we're definitely thinking about taking more of an active role there and maybe taking charge in some of these follow-on transactions and basically coming up with the conviction saying that, look, this is a team that we've been observing for the past 3 to 6 months. We're quite confident in our interest in doubling down on them, so to speak. And we're happy, of course, to share our insights there to facilitate someone to come in and take a lead and essentially set terms for their subsequent rounds. Of course, it's easier said than done when it comes to more international shops. It's still a very new region for a lot of established investors. So we completely appreciate that it might take a little bit of time, but again, I think within the greater context of MENA, Saudi remains the largest market across many verticals. Of course, it really depends how you look at it. Not necessarily the largest population, but again, within the context of GDP and spending power and just market depth, it's definitely quite difficult for someone to have a global asset allocation within this asset class without really dipping their toe into the Saudi market, so to speak. So hopefully we'll see that come to life sooner than later.
Do you see, I mean, the seed program is at that early level, and you're in tech and tech enabled sectors. And to date, it seems to me, again, as a layman, e-commerce has been very active, some fintech. Do you see up and coming sectors? Things
Absolutely. Absolutely. For the longest time,
Yeah.
it was getting a bit repetitive with
Yeah.
fintech and e-commerce plays. Again, both great sectors. Nothing to really criticize there, other than it's definitely refreshing to see some new and more innovative business models come to light. One thing that kind of caught us off guard was enterprise SaaS. That wasn't something that we thought would catch up as quickly as it seems to be doing these days. And of course, we're seeing also a lot of things that pertain to ed tech, which we've done a few in this current batch, along with prop tech and some of the other verticals that maybe in the past were a bit underrepresented. So it's kind of nice to see founders broadening their horizon in that sense.
And you're seeing that beyond your funds. That's sort of just the environment in general. That there's
Absolutely. Yeah. I guess at least within the MENA context, definitely. Talking to my regional peers across the Flat Six Labs platform, it definitely seems to be consistent with what they're seeing in the ground in their respective countries and markets.
What about, and we've talked about it, and you know, at a higher level, there's all sorts of articles, you know, that we carry in the Sustug Review, but Lucian and I see about all this money coming to the region, and you know, Sanabo, you know, released to the public anyway, or somebody paid attention to it, to who they're investing with, and that was a big, you know, that was a cycle in and of itself. Although, you know, folks like you have known this for some time.
To be honest, not to the extent that, because again, Sanabo specifically went through a bit of a restructuring over the past few years. So it was quite interesting to see them going full speed ahead on venture capital as an asset class, which is really their updated mandate. And again, as you correctly pointed out, it wasn't disclosed, at least publicly in the past. But it's refreshing, obviously, to see that being basically disclosed, and hopefully encourages more participation in that sector, both in the local context, regional, and international context as well.
Yeah, it shows like a confidence, right, that they're making these big bets into this wide swath of VCs in Silicon Valley and around the world. So yeah, it's half VC, half private equity, or roughly half and half, and investing for return with no local angle.
So again, it's been a while since my Sanabo days, so I'm not entirely sure on the recent asset allocation, but they've always been an alternative shop in the first order. Of course, now it seems that in terms of the specifics of their asset allocation, VC definitely takes a much more center stage role compared to maybe previous iterations of their asset allocation. So of course, private equity, infrastructure, real assets have always been a part of that portfolio. And I think it's just being repositioned essentially to focus on, at least from the info that was disclosed on the website, to focus more maybe on up and coming asset managers within the alternative space, again, with a heavy tilt towards venture capital.
So let me ask you a question. You can decline to answer, Yad.
You know, I wouldn't dare, but
no,
sure.
no. Well, no, it's got to be interesting on the ground there. Someone who's been in the space a long time, and as you referenced institutional investors earlier, and I think by implication, savvy long-term investors. I mean, what is the response when everybody and their brother shows up? And, they haven't been around, but they want a piece. Um, is
In
there
terms of fundraising
in
or
terms of
deployment?
both,
Okay,
both deployment and fundraising. You've got a lot of new faces in Riyadh, and
absolutely.
they all want to be part of it. And as if they're new faces, they're kind of late to the game is still going and it's growing, and you really have to be there. But some of these are late to the game as compared to a lot of their peers. Are they
Definitely.
are they
But
well
again,
received?
I absolutely.
Uh,
And again, because when you look at it from the context of the size of the Saudi economy, if you benchmark it towards economies that are within a similar range or larger, VC as a percentage of GDP is still quite limited. So I would argue that it's still quite early days, despite some players having been active in the market for maybe a decade, if not more. I guess it's pretty much new territory altogether. There's different factors at play that weren't necessarily there by way of some of the reforms that we're seeing on the ground. So all of that, of course, I would I would argue equalizes the playing field for both incoming investors and pre-existing investors. Of course, it'll be naive to argue that pre-existing investors don't have the benefit of any previous experience. Of course they do. But then again, it's still quite ripe and quite sizable for new entrants to hopefully have sustainable operations on the ground and beyond.
Yeah.
I have I have that that sage uncle who would say things the
Don't
best
we
time to
all? Yeah,
yeah the best time to plant a tree was 20 years ago. The second best time is today. So I
exactly.
mean,
Yeah.
what the heck, get in.
Mm-hmm.
And again, Flat Six Labs is a regional platform. We arguably haven't been active in Saudi, at least with a captive fund that we manage ever. So as a newcomer into the block, within some sense, it's basically what we're going through as a group, and we couldn't be happier, to be honest. So definitely, it's been, of course, a challenging experience, much like any other new setup and a new jurisdiction or country, but definitely much better than expected. And I think hopefully more to come from others and ourselves.
Yeah, what's so cool about what you're doing, Yad, is that you guys are at the earliest of early stage. I mean, the accelerator stage, getting
The
in,
riskiest of risky stage, but
sure,
yeah.
the riskiest of the risky. But but in order for this whole ecosystem to move from in a 20 chapter book, we're in chapter 2. We've got everything in place. The introduction is there, and now it's time to grow. In order for it to all succeed, the seed stage and the new companies need to form locally in Saudi Arabia, and Flat Six is doing follow on Series B, Series C all the way to the IPO. What you guys are doing that's so cool is you're there at the very beginning, getting these things started. And I think that's what's been missing in the ecosystem so far, because it's just so hard to generate that. So,
Well, there's been a few shops that have been doing it for at least I would argue since 2018. Of course, Sanabo 500 has been I think they should be in their third year at this point. So they've been doing it for some time, if not more. At least in previous iterations, we've also seen some of their global peers like Techstars, Plug and Play, be essentially operate on the ground. Of course, there's been some local
Yeah.
accelerators, incubators. Felak Investment Hub is definitely one of the first, at least locally bred and locally founded brands, headed by the Grumptious one of the first players, I would say, in the ecosystem. So it hasn't been deserted territory. It's been there. However, I would argue that it wasn't enough for the market size, and hopefully there's still more, obviously, for other players to come into the space and help accelerate that entire ecosystem and generate more founders that are investable for later stages. Of course, our mandate technically ends at pre-Series A. Nonetheless, hopefully there's enough Series A and Series B investors to come, although some might argue that Series B is also one of these areas that can benefit from incoming investors. And I think there's a lot of hope for international venture capital at Series B and above to kind of participate a little bit more. And of course, arguably, that would be a much more de-risked stage for people who are just looking at the country for the first time and haven't really operated in the region, so to speak.
Yeah.
This fund of yours, you have the participation of Saudi Venture Capital Company, which is a subsidiary of Moonshot, small and medium SME bank, essentially, which is these are PIF entities, PIF, Public Investment Fund entities. Do you see them? So these are some these are some ongoing initiatives that they're very excited about. Do you see them stepping up their participation across the board? And are they feeling this is a successful formula? Is that something?
Well, so on SVC specifically, they did announce a much larger pool of capital to be deployed over. So basically, their size doubled, and that was announced, if I'm not mistaken, during Q1. So again, to my point regarding dry powder being available in the system, that's specifically what I'm referring to.
Yeah.
I'm also quite certain, again, to your point about PIF entities, Jeddah Fund of Funds, obviously is also there as a very key player. Again, one of our LPs in this fund. Also have a larger mandate, and I think are definitely going full speed in terms of allocating to other alternative asset managers within the kingdom and within the regional context.
And a new CEO as well, right, with Jeddah?
Absolutely. Yeah. So definitely some exciting stuff to come.
And yeah, just to clarify, so SVC is not part of the PIF, right? Because they're under Moonshot and Jeddah Fund of Funds is.
Yeah. Actually, so that's all. So SVC technically is under the SME Bank, yeah, which is a new entity that, if I'm not mistaken, is a subsidiary or at least a program under the new development fund. So that's a new structure there. Of course, Jeddah Fund of Funds is a PIF subsidiary, and their mandate is to develop essentially alternative asset managers within the kingdom.
So you got one of the neat things about your seed program, and this is that you really provide significant assistance and training for these startups. There's got to be some good stories coming out of that. I'm sure you see the whole range of competencies. I'm sure you see a whole range of brilliance and ingenuity and creativity as well. But it's got to be really exciting to sort of be part of this process for these young entrepreneurs. They may not all be young, but certainly their organizations are, their initiatives are.
Quite a few are young. So we do have folks that are as young as 22, 23 years old as part of this current batch. So
I just don't want to exclude any demographics and get somebody who's somebody a comment on it.
So it's always interesting because you essentially end up becoming, and again, I'm not giving myself any credit there, and I definitely haven't done as much, and that goes to the team as well in terms of being that, but it does feel like you're a co-founder with them for at least a short amount of time.
Yeah.
So you get a front row seat to basically everything that they're going through, whether good and bad. And of course, there's a lot of bad, as is usually normal with business. There's a lot of doubt. There's a lot of uncertainty, anxiousness. So we kind of joke internally that our part-time job is to be therapists for our founders. So that's always fun. But yes, it's always exciting. It's always interesting, especially when we see teams go through pivots and maybe go back to the drawing board and revisit their business and operating model in one way or another. So never a dull moment, at least during the program, and I'm sure that will continue beyond the program as well. Of course, we were really fortunate to have quite a diverse industry coverage in this first cohort. One thing arguably that we could do a better job at is female founder participation. So that's something we're really working on for our second cohort. We were kind of sad to see that only 10% of these 400 applicants were female, and pretty much everyone was male in terms of application base. So we're definitely not finished in terms of building up a more diverse and more inclusive pipeline. Again, anything from redoing the entire landing page for one of the startups to revisiting the entire business model we've been through over the past few months. So yeah, never a dull moment.
This is great. And Lucian, I just think our timing is perfect. And so what we need to do is, Eyad, let's book it. And we should be back together in, I don't know, 8 to 10 months or whatever, because I really do feel fortunate that we had you last July.
Yep.
And that now you're part of the 966 family, like it or not. Because
you've been branded.
I honestly, I couldn't be happier. And again, really grateful for you guys giving me this platform. And absolutely, I'm more than happy to do it. Every time we finish a cohort, it'll be a great time to catch up and kind of share some of the things that we've seen.
Well, and it's such an important journey for the country and the larger picture, and so this is great. It helps us to understand how things are progressing. And I think Lucian is correct. It's a very early chapter of a long book. So this is going to be fun to read it with you, Eyad. You're the author. You can interpret it for us. So this is great.
Oh, I'm just the messenger, and maybe maybe your commentator, if you will. But yeah, the authors are honestly the founders and our LPs. Yep. We're just facilitating this whole operation, basically.
Yeah. Mr. Eyad Albayouk, General Manager at Flat 6 Labs in Saudi Arabia. Thanks again, Eyad. This was awesome.
Thank you, Lucian. Thank you, Richard. And again, hopefully we'll speak soon.